Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator for technology startups. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we've been doing these free mentoring roundtables year after year after year. So this is the 687th session. We started with an experiment back in September 2008. That was before the 1 million by 1 million program was launched. And in fact, it was that experiment that gave us the key insight into doing a virtual accelerator with online mentoring as the cornerstone of that program. So it's been a very long time. In any given year, we're here probably 48 out of the 52 weeks. So it's been a privilege to work with numerous entrepreneurs in numerous corners of the world. We've had over 300,000 people participate. Today, we are going to start the session with Warren Packard, partner of AI Fund. Warren has been in the business for a very long time, and I've known Warren for a very long time, although we haven't had a chance to catch up. So this is a perfect opportunity for us to catch up. Welcome, Warren. Great to see you.
Great to see you too. It is indeed. It's been a long time, but we're doing great, right? Doing the right things.
Trying to do great. I don't envy Tim Cook these days. So
well, I wouldn't put him low on the bucket, if you will. But we all have, entrepreneurship is a roller coaster, right? So today we don't envy him. Tomorrow we envy him. So it's.
Well, and he's had a fabulous run so far. So
absolutely.
So let's focus on AI Fund and what you've been up to. You've obviously switched gears from the last time we spoke. What is AI Fund? What is the thesis, and how have you positioned?
Yes, so we are a bit of a different animal altogether from a traditional venture capital fund. So we are a fund. We did announce the closing of Fund 2 just recently, which is a $190 million fund. But the way that in which we're different is we are a venture studio rather than a venture capital fund. So being a venture studio, we are co-founders in all the companies in which we ultimately invest. So rather than encouraging entrepreneurs to come to us and pitch their companies, we are a magnet for ideas and opportunities and business concepts. And then we take those opportunities and we build companies around them. Most of our limited partners are corporations. And these corporations have all sorts of great ideas bouncing around their four walls that they won't ever commercialize for whatever reason. They're non-strategic is usually the reason, because they certainly would commercialize their strategic companies. But like, for instance, we might hear from the legal department inside a large corporation that there's an incredible inefficiency. And they said that we can see that not only do we have this problem, but thousands of other large corporations have this problem. Let's go start a company to solve this problem. And that's what we do. So on my team, I have 4 business builders. I have 4 technology builders. My partner, Linda, runs recruiting. My partner, Eva, runs legal. And we have all the elements to start and build a company. But really the key to everything we do is hiring a founder. So it's kind of backwards. It's a bit unnatural, where we go out and we find a passionate, smart, driven founder who comes in and builds the company with us. And then ultimately that person takes the business forward as the CEO and off to the races and building a company and getting a product in. I'm sure we'll talk more about that, but we're a venture studio. That's probably the bottom line.
So the obvious question that stems out of what you described is, how do you identify, qualify the founder who's fit for this kind of a model?
Right, that's exactly the pressing question. So just to take one step back, is that once we find this opportunity, we spend about 4 weeks validating the opportunity. We need to make sure that it's a venture scale opportunity, that many different companies, not just one, has this challenge. We look for competitors, et cetera. And ultimately, if it validates and passes validation, we do we tap Linda and say, Linda, let's get a CEO in place. We call this individual the founder in residence, ultimately, but then they become the CEO after we build. But what are the characteristics of this individual? This is somebody who has built a company before from 0 to 1. It's somebody who is technically very astute. It's somebody who has that intellect and drive and charisma to be a CEO. And it's also somebody who has that subject matter expertise in the domain in which we're building.
Okay.
So we're looking for somebody that has all those elements, but really going back to what qualifies an entrepreneurial CEO, it does come down to that those subjective characteristics of somebody that is super driven, will be able to suffer through the challenge.
Oops, Warren's line went dark. This is an interesting angle that we're hearing from Warren Packard and the AI fund, where instead of founders pitching an investor, we have investors calling for founders. Warren, back to you.
I apologize. The audio went out for a moment, so I only caught the tail end of the prompt. If you don't mind repeating that.
We lost you for a bit, so
Okay, that was on my end. You lost me.
yes. So you were talking about you're finding a founder who's driven, and it sounds like you're looking for repeat founders. You're not looking for first-time founders.
That's correct. So I was a managing director of DFJ for 13 years. And in that time, we very frequently were looking for we were hearing pitches from young founders that had not started a company before. And we were eager and interested and driven to back those founders, in addition to those founders who had experience before. Mm-hmm. However, at AI Fund, you're absolutely correct. We are looking for repeat founders here at AI Fund. Now, that might be a founder who started a company very young, and they're still young, so it has nothing to do with age per se, but it has something to do with experience. We are looking for that experience where somebody understands what it takes. And again, success as a founder is not necessary, but just having lived through an experience, whether for success or non-success, mm-hmm. Is perfectly fine. So
talk about some case studies of problems that you have chosen to double click down on and run this process on.
So, yeah, we now have 46 companies in our portfolio. Those are almost all from Fund 1. So we have a number of different case studies. And I'll point to a few. We co-founded a company called GV Health. And this is actually a primary care healthcare company that is located in India. The whole notion was that accessibility to quality primary care for 1.4 billion people is not evenly distributed. And so how can we take advantage of the mobile phone to provide that first line of care for individuals across India and ultimately across the world? AI, of course, provides a tremendous technology to provide that type of functionality, as long as it doesn't hallucinate. And so we were able to cooperate or co-found this company with a seasoned industrial entrepreneur in India. And we found an incredibly entrepreneurial CEO who went off and trained their own model. large language model that performs at the top of the list, at the, the Hugging Face primary care medical app. And we were able to just recently launch this company, and we're starting to roll it out, and it is being rolled out in India, and we'll start rolling it out into other countries starting later this year. But it's a very exciting endeavor because it democratizes access to healthcare, which is so important for all the people across the world, and it's a great use of AI. So that's one example of a
so let me
company
ask
that
a
we pulled
question
together.
that's, I'm sure, on many minds. Why India? You're based in Silicon Valley. Doing incubation work like this is not easy to do remotely, but you've chosen to do something in India, and that is not even India. The India-US corridor, the India-Silicon Valley corridor is very adept in doing B2B SaaS that is targeting global markets, and now B2B AI that's targeting US markets, global markets, but born in India and validated in India. But now you're going after an Indian B2C play. So tell me more about why did you choose that problem to solve?
It really starts with the people. So we were approached by this industrial entrepreneur, Sanjay Reddy, and he had already built out a fleet of ambulances across India. And I believe servicing about 250 or 300 million people in India. So he had already this knowledge of the healthcare system in India. He had already scaled a business in India. He wasn't going to run this venture, but he had this passion for how do we, it's a double bottom line here. So you're helping the people, plus ultimately looking for a profit. But it does start with helping out a population. And because he had this specific domain expertise, and we were further able to find an entrepreneur who's really a global CEO. This is an individual who was born and raised in India, but came here to the United States. I should say, and came here to the United States for education. I actually had met him back in the early 2000s when he was at Stanford University. And then he had moved back to India. And it was just the right talent. I mean, this is obviously a very global talent pool that we can tap from. And GV Health is an exception for us. Most of our companies are founded in the United States, but it's a great example of entrepreneurship being able to arise anywhere. And these challenges, at the scale, if we can service 1.4 billion people, we feel we can certainly service another 6.6 billion people across the globe, especially since large language models and AI don't really know language boundaries.
Interesting. Okay, let's do a couple of more case studies. It's actually highlighted a lot of points that you are willing to cross geographies and so on, which I was going to ask you about anyway. So go ahead. What else?
Yeah, so another company that I can highlight is a company called ProfitMind. And this is a company that was it started out of another company that we had found, one of our very first companies we founded. We founded a company called Landing AI in the computer vision space. And the idea was to apply machine learning to typically manufacturing situations where you need to do computer vision, you need to look at the quality of products, look at deformations or imperfections, identify those, pull them off an assembly line, repair them, etc. But out of this company, actually, we started leveraging the machine learning to maximize the profit in retail establishments, which sounds completely orthogonal to industrial computer vision. And in a way it was, but a generalized machine learning skill set can be applied absolutely anywhere.
A lot of places, yes.
That's right. And of course we looked at this and said, wait, we need to separate these ventures. We're finding success in industrial applications with Landing. We're finding success in retail establishments with ProfitMind. And so we pulled it out. And Dr. Mark Crystal was the individual who was at the helm of ProfitMind. This is an individual who had been in retail for many, many years, for decades, and knew the industry well. In fact, this underscores an important point of how we start companies. AI Fund, we are not subject matter experts. We're not vertical industry experts. We know AI and we know how to start companies. We don't know healthcare. We don't know retail. We don't know Salesforce automation. But by working with a founder in residence or a CEO who knows these domains, we can very intelligently approach these markets. And this is the case with Mark Crystal. He knew retail very well. We pulled out the company called ProfitMind, and it is able to go and scour internal information and external information to maximize the profitability of a retail corporation. And this sounds very generic. Of course, there's quite a few companies that want to set out to maximize profitability of retail. But what we found out here with ProfitMind is that they were so far advanced of any other technology company in doing so. We're actually even struggling to figure out the appropriate business model for this company, because the effects on a business are so extreme and so quick that you can't possibly price that in. Like the benefits occur so quickly. So it's been
what were they doing that it was so dramatic and so quick?
And this will get beyond my specific knowledge of ProfitMind. I mean, aside that, because my role at AI Fund is to oversee all the 46 companies. So the one thing that I can say is that the technology that is behind ProfitMind, this predates LLMs or large language models. So it predates ChatGPT. So this is founded on traditional machine learning and deep learning models. And when you're training a model for a specific endpoint or end goal, in this case, profit maximization, there is a bit of uncertainty for how that model is doing what it's doing. It is a bit of a black box because you have all those internal nodes inside a machine learning model. So how is it actually doing it? How was it trained? I would have to tap the AI engineers of that company. But fundamentally, the part of the secret sauce is data acquisition. And if you're pulling in a breadth of data, both internal data, which of course is kept extremely confidential and private for that organization, but also external data that's available by looking around the web for competitive offerings, pricing, comparing one model to another. So you have a complete picture of a market. And when you have a complete picture of the market and you understand the pros and cons and the capabilities of a certain organization, profit maximization, revenue maximization, customer retention, those variables can be maximized extremely rapidly in an extremely powerful manner. So it's been a really fun journey to work with this company as they go into a company. They do have to integrate with the back end so that they get this data feed. And once they're able to integrate with them, the results are stunning, which is very rewarding because it shows the power of AI, not just large language models, which are extremely powerful, but also more fundamental machine learning, deep learning, these supervised learning
this
models.
company sounds really interesting. Are they beyond 5 million in revenue?
That they are getting there. So the quick answer is no, but they are very quickly approaching that number.
So, I mean, this one sounds really interesting, but I'm sure you have many companies in the portfolio that are interesting, equivalently interesting. We do these entrepreneur journey series, as you know, of companies that have at least 5 million in revenue, and we do a detailed study of how they're doing, what they're doing, and it's a very big coverage profile, kind of like a feature story type of coverage. So we're very, very interested in if you want to send introductions and send them in, we would be happy to do the stories. But let me point out a couple of things that I'm hearing here that are going to be really interesting for people listening. Number one is AI is calling to question pricing in enterprise software right now in a big way, right? Because we kind of settled in, I would say around 99, as the cloud computing wave started, the subscription revenue model, MRR, ARR, predictable revenue, all these, goodies came about. And around 2005, I would say it kind of settled into subscription revenue models, and everybody who was on licensed software models switched to subscription revenue, and Wall Street settled into subscription revenue. So the whole industry kind of organized itself around subscription revenue, software as a service. But with AI, that model is being challenged. Usage-based pricing, outcome-based pricing, there's all kinds of things being considered right now. And as those of you who are listening, as you work through your own pricing models, think about all of that and think about ROI-based pricing. That may not be subscription pricing. It may be something else. And there is also a big trend going on right now of human in the loop services. And if you're providing services around AI, and you can charge on an outcome-based pricing, ROI-based pricing models, and those could be incredibly lucrative, multi-million-dollar contracts solving narrow enterprise use cases that hit directly at ROI effectively. So, Warren, coming back to what you said about your model, one question that is really central to your model is the question of ownership. I don't know how much time you spend on LinkedIn. Obviously, we're all spending a lot more time on LinkedIn these days. It has become the global water cooler, so to speak, right? So
absolutely,
the discussion about ownership is very present in entrepreneur minds right now, and people are realizing that the earlier you start giving up equity, the more equity you give up and end up with very little by the time you hit a Series C company or a Series D company. So people are starting to become more conscious. Now, in your model, the entrepreneur is being recruited. So what kind of ownership structures are they being recruited with?
I'm glad you asked that question because this is so important. We at AI Fund, we can't just grab equity because we founded the company and we brought in the CEO. We can't just say, oh, we want half the ownership of the company or 60% of the ownership of the company because we started it. We just can't do that. That would break the cap table. That'd break the company. So we always look at ourselves as a minor co-founder of the company. And that founder in residence who comes in and works with us, they always get much more equity than we get. And that one individual gets much more equity than we get. And in fact, just very bluntly, we get half the equity that that founding CEO gets. And then on top of that, there might be equity for another full-time co-founder, let's say a CTO who comes in, and then there will always be an option pool. So we are out of the gate a minority common shareholder, common founder, because if we took more than a small minority stake in the company, it just wouldn't work going forward. It's exactly the reason. We need to be able to bring in a founder in residence who feels ownership for the company, who is the largest shareholder by far, and feels like this is their company. That's key. The other thing I would say, and because you're pointing out, hey, by Series C, Series D, there's a declining ownership. Well, of course, there is always a declining ownership in the company, but maybe perhaps too little remaining for a founder. And one of the great things I see about AI is the ability for a founding team to build and get further faster with less.
Yes.
You just don't need as much money. And of course, a lot of folks are talking about, who's going to be the first billion-dollar valuation single person company. And I don't actually recommend that. I would say my goal would be the two-person company because it's always great to have a teammate. I would never say you should work alone.
Matter. Single, double, single, solo entrepreneur. I'm a solo entrepreneur. I've always done solo entrepreneur ventures, but that doesn't mean that you don't have a team. You know,
That's
my
right.
team has been working
Exactly.
with me for 15 years, so more than 15 years. So that doesn't mean anything.
Absolutely.
But I think there is fallacy in thinking in that mode of confusing the markets. Like you're going to build a solo unicorn, you're going to build a 3-person unicorn. I think there is fallacy in that. But let's stay on the topic of your model first, and then we'll get to that.
Yes, exactly. And the point I was driving to, whether it's 1 person, 3 people, 10 people, is that you can make a significant amount of progress with AI by your side. I mean, being able to code very, very rapidly by just using prompts to generate your code. We are a product-led organization here. So when we have a 10-week build process because once that founder residence is on board, they remain paired with a business builder, with 2 technology builders. We also bring in a board member as well. And then a 10-week period, that team of 5 is building a company. And every single week, we prototype the product, we put it in front of prospective customers, and we iterate every single week from the very beginning. So we're constantly getting customer feedback, external feedback, and we do that 8 times in our process. And it's very inexpensive. It's very rich in terms of the information that you glean. And by the time the build is over, we very strongly understand the ideal customer profile, the minimum viable product requirements, and we can get to an MVP and get to launching that product very quickly after funding. And it just doesn't take a lot of capital. And that's the key for retaining ownership, is to be that lean corporation. You can do that more than ever.
And you are putting in some amount of capital in this phase, or yeah?
Absolutely. Yeah. So the build phase, that 10-week phase, is actually fairly nominal amount of money that we put in, because, well, we're putting in a lot of human resources in that, but we also put in some capital to give the founder residents a stipend and pay for some external resources or data or whatever it needs to be done. The larger check gets written after the build, assuming the build is successful, and not all of our builds are successful. And that's where we typically put in $1 million into the company. Or if we have a co-founder, or another co-founder, a corporate co-founder, because we co-build with our corporate LPs, they may also be putting in money at that time. And typically our pre-seed round is anywhere from $1 to $2 million to get the company into launching, get initial customers on board, paying customers, referenceable customers, and then go out for the seed round of financing, where we're looking to raise $3 to $5 million for the company to get it to product market fit.
Okay. And what have you seen? You said you've invested in 46 portfolio companies so far. What are the trends? What are you seeing? Like, how many companies have already exited, perhaps, or, you know, because they're, you know, sometimes companies that have early validation and can hit success early also like to get out early.
That's right. Yeah. So we're still a very young fund. So we're, as I mentioned, we just announced Fund 2. So our Fund 1 companies have been going for some time, but the classic dilemma of raising a second fund for a venture firm is that you really don't have many exits by the time you're raising Fund 2, because frankly, your success stories take on the order, 6 to 10 years to materialize.
Absolutely. By Fund 2, you will not have exits, not that many. I was asking more in that because there is a bit of a trend right now of seed strapping to exit starting to happen. We are seeing a bit more of that. So I don't know if you have started seeing as well within your portfolio, but it sounds like not yet.
Yeah, I mean, we have a couple of companies who have exited. We have one company that was sold to Apple just a few months back. We had another company that was sold to IBM a few months before that. We have a few companies that are out of business because, of course, not everything succeeds. And
of course,
that's right. And that's why we have a portfolio. But we are investing in, as I was mentioning earlier, venture scale companies, and we're looking for these large outsized returns like any venture capital fund would. And so we are expecting these longer journeys.
So you are unicorn chasing fundamentally.
Yes. And all that being said, with a smaller fund, and one could argue, is $190 million a small fund or a big fund or whatever? They don't have to, yes, we're always looking for unicorns. We want to be creating the game changers for sure. But we can have quite a few doubles and triples in our portfolio that do great for us because it is only a $190 million fund. And so if we have a reasonable ownership stake in a company that sells for $500 million or so, that's going to be an extraordinarily pleasant exit for us. But certainly we're looking for those companies that can exceed $1 billion in value and be the seminal companies of this AI era.
Very interesting. I know you have to go. This is a very interesting slice and very interesting slicing of the venture capital ecosystem. So thank you for sharing this with us, and we'll keep in touch. And definitely, if you send us companies, we'll be happy to cover them.
Excellent. Well, it sounds like there was some interest in Profit Mine. I'll send you some more information on that company as well as GV Health. Thanks so much for your time.
Take care. Bye-bye.
All right, Simone. Bye-bye.
Folks, we're going to switch to the entrepreneur pitch session. We have 4 pitches, so this is going to be a long hour. Just be mindful of our time sensitivity. So try to not ramble, try to be crisp and precise so we can get to the heart of the matter. Remember, this is a safe working session. We're not trying to entertain people like Shark Tank. We are trying to work. So let's work. And if you disagree with my feedback, that's your prerogative. You do whatever you want with the feedback you get here. My job is to give you honest, authentic, intellectually honest feedback, and I will do that. Modi Daryani, you are first. Unmute your line, Modi.
Hi, Amanda.
Hello, go ahead.
Yeah, so.
Revive Analytics, what do you do?
Okay.
Please get started.
Yes. Our core value proposition is we empower businesses to make faster, smarter, and more confident decision using data-driven insights. Along with founder and co-founder, we mentioned, we have a team of 4 members and designer, front-end developer, back-end developer, and a tester. 6
of you are working on this project.
Yes, and we are currently doing bootstrapping.
Okay.
Target customer, let's see, let's be the honest, most small and mid-sized businesses don't have the time, money, or tech team to build a full in-house business intelligence stack, BI stack. So, and even if they try, it is often too complex and too slow and too expensive as well. So,
and when you say small and medium-sized enterprises, are these Indian companies or global companies?
Yeah.
What are you targeting?
Actually, initially we target India market first.
Okay.
So we are targeting India market with small and medium-sized companies.
What kind of size? When you say small, what is the tighter band description? Like what kind of, how many employees, what kind of revenue levels are we talking?
Maybe I finish these slides and then maybe, yeah. So come to the previous slide only. First, I mentioned the, go to the previous slide, target customers. Actually. Yes, so there is a pain point, I told you that. And what happened when the small and medium-sized companies don't have a full in-house BI stack, and if they are try, it is very expensive, right? So what happened then? The decision makers, the one who know the business best, are stuck waiting for reports, relying on other to provide insights. And because of that delay, the right decisions are not taken at right time. And that's where the real pain point lies. They actually miss the opportunities. The deal could have closed, the trend could have caught, but now all gone. So the solution, which is the last line you brought, that's why we built the solution to eliminate the overhead, simplify the process, and make sure you will never miss a decision that matters. So we turn raw, scattered business data into fast, decision-ready insights without the need to build a full in-house BI stack. Now, the Revive analytics empower growth stage businesses to make confident data-driven decisions in days, not months, using the power of AI with the domain-specific knowledge. Right. So now this customer acquisition, our customer acquisition focus is on SMEs and startups. The one who need fast, smart solution without heavy investment. So our go-to-market strategy is simple. We start by capturing leads, then offer free trial tokens because as you said, now the scenarios change from subscription model to usage-based model. So now everybody talks about the tokens. So we offer free trial tokens to users, and user can experience the value firsthand. Once they see the impact, we upsell based on how much they use through a token-based model. The more they grow, the more they use, and the more value they will get. So that is the overall approach. Now, related to the customer validation point, we are currently in the development phase, and the product will be ready for a proof of concept by the end of next month. Starting July, we will begin gaining customer traction. That's when actual customer validation kicks in. So currently we don't.
You haven't done any customer validation so far? You're not working with any customers?
No.
That's a very bad idea, Modi. You know, in 1 million by 1 million, our mantra is do not write a line of code without immersing yourself in customers. And you know, building something with no customers in the loop is not the right way to build a business.
Actually, yes, currently we are doing the bootstrapping. We have a customer. First, we pitch the product there, but so far we haven't tried pitching there so far.
That's a problem. This is a problem.
Yeah.
Bootstrapping, especially if you're bootstrapping, you should not build without customers. And these numbers you're quoting, $1 million and $360 per annum for customer, $360 million in 5 years. Now, this doesn't make any sense if you don't have, you know, a much more precise idea about what you're doing. For example, you're talking about catering to all domains, all SMEs, and you cannot narrow things down. That's not the way to build a company. The market you're going into is extremely crowded, right? This kind of AI-driven analytics is an extremely crowded market. So unless you narrow down how you're going to position and what, you know, how are you going to build this business? This is, you know, the answer to your question is your business pitch doesn't say anything about why you're special. So you really need to learn positioning. The first thing you need to learn is positioning. Which domain are you going to focus on? What size of, you know, what are the size of, you know, business that you're going to focus on? What use cases, what problems are you going to solve? There are numerous questions you have to solve, you have to answer to be able to build this as a company. At the moment, it's just a development project. This is not a company yet. And without customers in the loop, this is not going to be a company. So we have a very clear methodology of how to put one foot before the other. I strongly recommend you follow that methodology. Okay. All right. You can ask more questions later on. Let me go through the 4 pitches, and then I will open it up for more Q&A, and I will explain a little bit to you on how to use 1 million by 1 million. So hang on, I'll come back to you. Laurence Gontariu, you are next. Could you please unmute your line? Modi, you can mute. Yeah, go ahead, Laurence.
Hi.
Hello.
Nice to be here. I want to present today for an automatic production line for smartphone and tablets. It's a concept that goes from what it is now. That means stacking, everything together like modules in the way to automatize the products and take out the motherboard of to construct in the way that is like 3D printed.
And where are you joining from, Laurence?
Romania.
Romania.
Bucharest.
Are you involved in a production line like this?
No, I am engineer and I was working and tinkering with a lot of phones and equipment. And
so you don't have direct experience with phone manufacturing necessarily?
At this moment, no. At this moment, no. It's
All
more like a concept, how it is as to produce it more faster, more accurate, and even
have you
to
talked to
produce
any customers? You're saying your global OEM smartphone tablet manufacturers like Apple and Samsung are your target customers. Have you talked to them?
Not yet.
Okay, that's essential.
Yeah. Yes, I know. I have to make first the brevet to put the patent first. That's why I didn't talk to them yet.
All right, so go ahead, keep going.
Yes, our system is more like to go in the direction that is like I 3D print everything. It's to make it more less stops, not so much for each part. To put it more faster, let's say, and more accurate.
But there are tons and tons and tons of issues that are not manageable with 3D printing. Like, I don't know how much you know about semiconductor packaging. There are 3D packaging that goes on to get to the small form factor devices. And I don't think that's necessarily doable in a 3D printing mode. You're basically stacking either vertically or horizontally multiple chips to get to a very, very tiny
space.
System in a chip, a system in a package, basically. So
it's not the same thing like 3D printing, but it's like the 3D printing, let's say, where each component can have a space, then it is molded together.
Yeah. So okay, you're tinkering with these things. What worries me is that you're doing your tinkering without talking to customers, and don't do that. Please don't do that, because if you start talking to customers and understand what their concerns are, what their pushbacks are, if that may even invalidate your whole idea. And there's no point spending money on patenting something if the whole idea is invalidated. So you need to get down in the depths of the people who are actually working with these kinds of technologies inside Apple, inside Samsung, and so on, whatever phone vendor you're talking about. You can't do that in vacuum. You cannot do that from the outside. You're going to have to talk to people who are involved in those kinds of engineering processes.
Yeah, that's true.
Okay. So, I can look at your pitch, but I have nothing to say because I am not inside those organizations. And if you don't talk to people who are inside those organizations, we have no insight on whether this is something that is going to fly with them or not.
Okay, that is true.
Okay, so I would say your number one takeaway from this call should be try to maybe navigate LinkedIn and trying to find the kinds of people who would be able to give you insights on what's happening inside those companies and bounce your idea off them and see if you can get traction. And if not, then this business is not doable because there are not that many customers. There are only a very few customers. There's Apple, there's Samsung, there's a bunch of Chinese companies, there's, here and there, but it's not like this is not an industry of million customers. There are a few very large customers, maybe 20 very large customers. And you have to talk to them.
Okay.
Okay.
Thank you.
You're welcome. All right.
Yes.
Gitanjali Chandrasekharan is next. Laurence, you can go on mute. Gitanjali, please unmute. Go ahead.
Hi. Good morning to you. Good evening to everybody who's in a different time zone. Hi, I'm Gitanjali. I'm from Mumbai, and I'm here to speak about Eco Genie Services. Could I move to the next slide? Yes. So I'm still building it. What I want Eco Genie Services to be is a platform for discovery, hiring, and review of green services in India. What I mean by, we can move on to the next slide with this as well. What I mean by green services is everything from waste collection to waste composting, setting up water harvesting systems in your house, and later time even getting solar energy, solar panels, solar services for all of this in your house, in your housing colony, or in your commercial spaces. My target customer is the people who run these services in India. It's not the people who, it's the people who provide these services to their customers. They are the people that I want to get on board. What we really aim to do is set up something like a Zomato for green services, something where people can discover more green services that they can get for their homes, where people can review them, share what are the conveniences, what are the difficulties that they've had, rate one service versus the other, create an ecosystem essentially where the services and their quality also grows. And
Gitanjali, I have a question.
Yes, sure.
Do you have evidence that people are looking for these services?
Yes, little evidence. It's not a lot, but I do have evidence because just in the first, right now the platform exists only on Instagram, and in the first week of launching it, we had one of the largest electronics company in India, their sustainability program, reach out to us asking if we knew people who could help them with their e-waste. So there are people who are looking from individuals to companies who would, it's mostly a matter of we wouldn't mind doing this, but we don't know where to reach out, whom to reach out to, whether these are trusted sources, and how does this function essentially? What is the kind of money you need to pay? Where does it end up? So these are the questions that we hope to answer with the platform. We also, the idea is also that it's not just, so you already, a lot of these services already exist and are already listed on a Just Dial or an IndiaMart website. But the idea is also to talk about their USPs, to talk about their case studies, to talk about how they solved a problem for someone else, and to do more active listing and pushing instead of what exists right now, which is passive on the other sides. Customer acquisition right now has been, we have one customer. I'm working towards getting a second customer, but we have, right now it's actively through direct sales calls and meetings. We hope later it spreads via websites and social media and a peer-to-peer network.
Well, you can't hope. You have to have a customer acquisition strategy. There needs to be a go-to-market strategy. Anyway, we can work on that, but let's.
Sure.
So when
Yeah.
this large electronics company in India is whom you're working with?
See, it's not so much that we're working with them right now, because for me, the client is the company that provides the e-waste. Let's say that provides the e-waste recycling service, not the one that the company that wants the e-waste service is not necessarily my client, but I would connect them to the service provider.
So what is your business model?
It would be something like an Etsy, where you list and you pay a subscription for the listing. And I am still exploring whether how profitable with the other companies is about getting a percentage of the leads generated.
Okay. So you don't really know yet how this business is going to be structured.
Well, I do know, but right now, honestly, because this is a new space, I haven't been able to convince anybody to work on the giving a percentage of the leads. They are still wary of paying for social media for a platform that is just being built. So, I mean, ideally, that is where I would like to go, because otherwise, if it's not profitable, it doesn't. I mean, there's no point in building it and working so hard for it. Essentially, it won't be sustainable. That is the ideal business model that I would go with, unless I come across something better.
Well, there's a whole bunch of things that I can point you to do, but I do think that you should learn how to build a business. You haven't done this before, right?
Not the scale. No, not really.
Okay. So there's very, well understood steps that you take in building a business. And I do recommend that you learn those steps. And yes, we can teach you that. So just hold on. I will go over how to use 1 million by 1 million to learn. And you can decide whether you want to use 1M by 1M to do that. Let me take care of Jabeer first, and then we'll come back to talking about the resources. Jabeer, could you unmute, please? Go ahead.
Hello, ma'am.
Yes. How are you?
I'm fine. How are you doing?
Okay. What are you working on?
Am I
You're a
audible,
digital ads expert.
Yeah, ma'am.
All right.
Ma'am, my idea is about building a unified messaging app for text communication. For where user can
what
connect
communication?
text communication mainly, like messaging.
Why do you want to do that at this stage of the game? There are lots of those out there.
No, yes, ma'am. There are already much text communication, but this is where not another text communication app where user can connect all different communication like social and professional app in one single dashboard, so they can view all the messages on one screen. Like along with the messages, they can view the status, stories, and building their community space. As now, every internet user using at least 5 plus different messaging app. So I want to integrate all those application messages on one dashboard.
I don't see the point of this. What validation do you have that people want this?
Yeah, not from I have picked some users who are using some 5 to 7 different message app. They will say that we will use, but I don't have any prototype or
I don't think this is a good idea. I don't think this is a good idea.
I shared with some, I guess at least 40 to 50 people, and I got positive response from them, man.
Well, here, take this as a negative response. I don't like this idea.
Okay, man.
So since it's an idea stage company, my take on this is that this idea is not going to fly. And just to build something like this at scale is so expensive. These kinds of companies are very, very difficult to bootstrap, and I just don't think the idea is strong enough for you to go down this path. I think you
Okay.
can come up with something better, something more specific.
Okay.
So let me hold on. Let me explain to you how to use 1 million by 1 million, and maybe this is actually going to help you as well. Slides. All right. So as you know, 1Mby1M is a virtual accelerator, and this is global. So anyone from anywhere in the world can use it. So everything is accessible from 1Mby1M.com. The premium program is our full acceleration program where you have access to the curriculum. So the curriculum, for many of you who haven't done this before, it applies to Gitanjali, it applies to Jabeer, it applies to Modi even. You should definitely study the curriculum and learn how to put one foot before the other, including customer validation, positioning, customer acquisition, all these points, B2B sales strategy, all these points where you haven't done it before and you don't know how to do this. The curriculum is going to be really helpful for you to go through. And you can use the mentoring that comes with the premium program. It's mentoring like this. You can actually come and talk to me, discuss your projects, and we can double click down on specific issues in your project on a weekly basis. That's what the premium program offers you. And then when you are ready, none of you are ready yet, but when you are ready, we will help you get to becoming a validated business and by putting all these pieces together. When you are ready, if you are fundable, we will also introduce you to investors. Becoming fundable is a complex set of things that you have to accomplish, and we will teach you what those are and how to accomplish those if that's the direction you want to go. We don't force people to go the direction of funding, but if you want to go the direction of funding, we will help you get there. And if your business supports that kind of journey. In addition, we have a lot of influence in the market. I have a lot of influence in the market, and we can also help you with marketing, customer acquisition, and so forth through our platform. So that's the premium program. It's an annual membership fee program, and you don't have to just be in the program for 1 year. You can be in the program for as many years as you want. Freshworks, which is one of the largest companies that was built out of 1Mby1M, was in the program for the first 3 years of their journey. So you can be in the program for as long as you want, as long as you need to, and that's fine. If you just want to start with the curriculum, that's fine too. There is a monthly subscription for accessing just the curriculum. That is also a reasonable starting point. I'm getting to questions in a moment. Let me finish this segment and I will take more questions in just a moment. So go to the website and dig around what to expect from premium, what to expect from basic. Some people come to us with a very, big concern about privacy and stealth and so forth, and they want one-on-one private consulting. Yes, it's available. It is a lot more expensive. It's $1,000 per hour. Premium is $1,000 a year. Basic is $99 a month. One-on-one consulting is $1,000 an hour. We have upcoming free roundtables every week in June on Thursdays. If you have already pitched at one of these free roundtables, then you will not be eligible to pitch again, but you can be in the premium program and pitch as many times as you want and come discuss as many times as you want. But if you haven't pitched yet, you're definitely welcome to reserve a slot and schedule with Maureen to come and pitch. If you have questions about the program after today's session, Irina is your contact, Irina@1Mby1M.com. She can also get on the phone with you. So let me see questions that I think are here. I think one of the biggest concerns of anyone starting something new and innovative is the risk of idea theft. Someone starting with an idea may not have deep pockets and required expertise to swiftly move from idea to MVP, and that gets scary. My question is, how do you get market validation done and seek money from, let's say, crowdsourcing or investors while not feeling threatened? You know, ideas come a dime a dozen. Real barriers to, competitive advantage really is based on execution. How well you execute, how fast you execute, what kind of customer traction you get, and who you are. Your unfair advantage in any market comes from who you are, what have you done so far, what kind of domain knowledge do you bring to the table. Those things are not so easy to replicate. And you say, my other question is whether investors would be willing to invest in a company where the app itself is the business, that is, revenue stream is dependent on the freemium model. Yes, but not if you are only doing free users. If you have an app that only has free users, you will not be able to attract investment. Premium conversion rates are extremely low. If you're doing a point or 1% or 2% conversion, you're doing a lot. If you're doing 4% conversion from freemium to paid, you're doing astronomical. So that's a very undesirable business model from investors' points of view. But if apps have been funded, if you have an app that is converting at a very good pace and it's viral, you're getting lots of free users, and even 4% conversion, 2% conversion is meaningful in terms of revenue generation, that would be interesting for investors. Investors, remember, are trying to go from 0 to $100 million in 5 to 7 years. That's the kind of company they want to invest in. If you are that kind of a company, or if you can convince investors that you can be that kind of a company, then you are fundable. Otherwise, you're not fundable. So where are you joining from, by the way? HT, I don't know what your name is, but HT is what I see on my screen here in the questions. Where are you joining from? Anybody else? Questions? If you want to talk, you're based in London. Okay, wonderful. If you want to talk, if you want to ask questions through the panel, through the computer audio, Maureen can, if you just let us know, Maureen can put you on the panel and you can talk to me right now. Anybody? Questions, comments, introductions? Yes, no? Sandeep wants to be put on the panel. Maureen, can you put Sandeep on the panel? Here we go. Sandeep, you can unmute and ask questions.
Maureen, good morning. How are you?
Good morning. How are you?
Hey, Simran. Sorry, first of all, thanks for all this, roundtable thing. I think it is very helpful for anyone who is listening, even though who doesn't want to be an entrepreneur, or who wants to be an entrepreneur but always hesitant to become one, right? Because all the barriers and all. But my question here is with we talk about this all AI agentic, solutions being built, companies being formed, but with so much low barrier to get into this, industry, right? Or bring in solutions. Why would someone invest when you know that after 6 months another company will build a similar solution,
Yes.
right? And
Very good
it's so
question.
difficult to maintain the monopoly, or you can say the uniqueness of the solution, right? It's so
Very good
difficult to
question.
maintain it.
Very good question. There are lots of low-hanging fruits. People are scrapping together solutions and going out to market and actually getting customers right now. So lean startups, ultralight startups, solo entrepreneurs, all these are very much in vogue at the moment. People are building lots of companies in this mode, and most of them have no defensibility. So the churn is high, competition is high, markets are very noisy, and these kinds of companies are very difficult, if not impossible, to raise money for. So if you want to raise money, and if you want to develop sustainable competitive advantage for the long run, then you have to build something with much more domain knowledge, much deeper integration, exit barriers, and so on and so forth. So very good question. I will say one thing though. If you can very quickly build something and start making money and start generating millions of dollars, even if that is not a sustainable business, you can make very good cash very quickly And that may not be a worthless exercise.
Thank you. Thank you for that. And I think then that makes sense. The other question that I have, a follow-up similar question, is, as you said, that you should have a customer to work with for your idea before you even do one line of
You
a
need
code.
to talk to lots of customers to get not just one customer. You should talk to
Right.
lots of customers to validate whether you're building something that lots of people are interested in or not.
But why would a customer how it's a very challenging problem, right? Because you are unknown as a person in this domain, and why would a customer entertain you to be talking to unless you have a direct connection with a customer that you know is looking
So
for a solution and just.
this is why the best entrepreneurs are those who come from a domain with deep domain knowledge, which is their unfair advantage, and have customer relationships, and they already know the problems that these customers are facing. They introduce themselves with being from the domain. They know the problems. They want validation of the problem, stuff like that. And if you're not from the domain, if you're starting something new, then you have to network into that domain, and your understanding of the problem is not going to be as rich, most likely. So yes, the people with domain knowledge have an unfair advantage.
And one more follow-up question, I'm sorry, probably the last one. You said that the domain knowledge, right? And being a technical person like myself, you have a good domain knowledge, right? You have good ideas of the problems that you're trying to solve, but you do not have customer connections, right? You do not have a direct link to present your solution to someone who can validate and
Yeah, but if you have an insights into the customer problem, you can get to those customers with that insight.
Okay. And then is this something that your platform can help with?
Yes, potentially.
All right. I appreciate it. Thank you.
Sandeep, where are you based?
I'm in California itself.
Okay. In the Bay Area?
Yes.
Okay. So by the way, if you already have a job and you are starting down a first-time entrepreneur's journey with a job, one path we recommend very often is bootstrapping with a paycheck. You keep your job and you start working with 1 million by 1 million, keeping your job, and there's a lot of learning, right? There's a tremendous amount of learning. And there's no reason why you shouldn't start that learning process while keeping your job.
No, and that would be the part that I would be looking for, because I don't think, because as I said, right, the barrier is less, the investment is less. It's just more about knowledge and more about, your domain expertise, which I can bring in, right? So learning is one thing that I would look for with my bootstrapping money.
Yeah. And most accelerators do not let you bootstrap with a paycheck. We do. So if you're trying to bootstrap with a paycheck, 1 million by 1 million is your only option, really. And we are very adept at handling this kind of situation.
Actually, thank you so much. Thank you.
You're welcome. HT, you have another question, I think. Would investors invest only if an app exists already with proven conversion, or would they be willing to invest when the first version of the app is being built? I don't think investors would build in a first version of an app without any traction. That's a very, very unlikely scenario. Gitanjali, do you have another question?
No, I don't.
Okay.
I'll just look at your website.
Your hand is up.
Oh, I think I put this up earlier.
Earlier. All right.
Yeah.
Okay. Anybody else? I see more people in the room. Does anybody have any more questions? Just let us know, okay? All right. I don't see any more questions. If anybody wants to introduce yourselves, you're welcome to. Or if you're just checking it out today and you want to sign up for another follow-on session where you want to come and actually discuss your project, please do that. So I look forward to working with more of you as we go along, whether it's in these pre-sessions, public sessions, or in the premium program. Please go ahead and sign up if you are looking to join the premium program, and I will meet you in the private roundtables as well. Shailendra is asking, what stage of funding generally possible on this platform? Pre-seed, seed, all of that is possible. but all of those have, you know, requirements. So pre-seed, seed, Series A, all of it is possible. We have a lot of bootstrapping going on this platform. So, you know, if you are, we will support bootstrap first, raise money later. If you are trying to bootstrap to $1 million and go for a $5 million Series A, we could look at that, but that is also viable if the rest of the pieces are in place. But the most common stage of financing that happens here is pre-seed and seed, pre-seed and seed. Please do, Shailendra. Where are you located? Denver. Okay, fantastic. Anybody else? Happy to answer more questions. Modi has another question. As we are working on this in the same domain, we are seeing issues. Why can't we create an MVP product before validation? You can create an MVP product, but the chances are that you are not going to hit the mark without talking to customers. Your product currently is too broad. And unless you start narrowing things down and follow some methodology, you're not following startup methodology. You're going into a domain that is incredibly crowded and starting to build a product with no real strategy. And that is not the way you're going to succeed in building a business. You don't have a positioning. Your product doesn't have a positioning, and that's not the way to build a business. You need to learn to position a company. All right. But you can do that. You know, positioning is something you can learn to do, and I can help you with that. So you're a perfect situation. You're in a perfect situation where you would benefit tremendously from joining the program and following the guidance that I'm going to give you. Anybody else? Yes? No? Done? All right. That's
Okay.
it then. We will see you next in the follow-on sessions. I will wrap up the recording.